I'm Brendan Yurik. I'm one of the founders and the CEO of Electric Royalties. We are a royalty company focused exclusively on clean energy metals. So we're one way to offer exposure to the entire transition to clean energy through one vehicle. We've got 9 different clean energy metals which we target up on the board here. Lithium, copper, manganese, zinc, tin, graphite, cobalt. We are really the only group out there focused exclusively on these metals. So we've done the first graphite royalty financing ever done, the second and third tin royalty financings ever done, and we've been one of the most active groups out there in the lithium royalty space as well. So where we're at today, we've got 72 assets in our company. 40 of those are royalties. 31 of those are actually properties optioned out to third parties, mostly in and around the best lithium projects in Ontario. Right now where we're at today, we went public about 4 years ago, June 2020. Market cap's around 25 million on any given day. We've got less than 100 million shares outstanding. Myself and my family are very large shareholders. We're about 15% owners in the company. And then we've got a very strong supportive shareholder, Stephen Gleason, who owns 23%. And he has actually given us a facility for $10 million to basically go out, do acquisitions. So we've been using that for the last year and a half to basically fund deals without having to raise any equity. So we've drawn down 7 of 10 million on that. It's a very favorable facility. We don't have any payments of any kind, interest or capital payments for 4 years. It's convertible into shares at a much higher share price. And we can repay it any given time with no extra cost, should we raise equity some point in the next couple of years. So we've targeted these metals. They all have exponential growth forecasts moving forward over the next couple decades. I don't think anybody really disputes that. It's going to be interesting to see how they keep up in the mining space when you have a 15-year average development timeline. It's going to be very difficult, I think, to quintuple production. I think you'll see a lot like what you did in the lithium space, where prices went up, 19x over the course of about 18 months. They've come back, quite a bit, but they're still about double where they started. And I think you'll see a lot of that throughout these metals. The real reason why we're so bullish on this is actually the supply side. I think that's one of the sides that you kind of have to know the mining space. You have to know all the projects that are out there. But when you look at the supply side for each of these metals, we see major shortages coming in the next couple of years and lasting for decades. So we're a little bit different. We are a royalty company. Royalty company, for me, is the best business model in mining. It's a much reduced model. First things first, we're diversified, right? We have 72 assets. We are diversified also across 9 clean energy metals. We have very low G&A. Our G&A is about $1.5 million a year. We don't have to put up any of the development costs, capital costs to actually build out the mines. Once we've acquired these royalties, they cost us nothing to hold. And essentially we are owed a percentage of the cash flow once these mines come into production. Furthermore, because we are dealing primarily in very good jurisdictions, we focused on North America, Europe, Australia. They've got very strong mining codes. We can actually register a royalty against the property. And so that actually further protects us. If management takes on debt at the wrong time, the CapEx doubles on a project, as we've seen. Whoever takes that forward is ultimately still going to have to honor and pay that royalty. So definitely a much more different model and something that we definitely focus on. So we have got a big stake in lithium. I'd say we're a little bit heavy on lithium. We just closed an acquisition for an additional 18 royalties and 30 properties in and around all the best projects in Ontario for lithium. We're really excited about this. We've got a couple other flagship lithium royalties in the space. Our OCE lithium royalty, that'll be the next project to go in production in Quebec. It'll be part of the North American Lithium Hub, which is already in production. And essentially, once they get final permits, they will incorporate OCE into production as well. We've also got a royalty on Seymour Lake, which is slated to be the first lithium project in Ontario to go in production. That feasibility study should be out later this year. And then in and around, we've got really good royalty coverage, basically across all the projects in Ontario and hard rock lithium, really in Eastern Canada. So this is the project I mentioned that will be going into production hopefully later this year. The joint venture has stated that they plan to reach their goals of ramp up, which would mean that they have to include OTA because that was meant to be about 33% of the feedstock for that plant. And so, any of these royalties, we've got a couple more royalties that could come into production this year as well. We have 2 producing royalties that last year just stopped production in November. Our Panuda tin royalty in Spain, which we funded twice last year. It's Europe's only tin mine. We expect that'll come back into production this year as well. And then we also have our Middle Tennessee zinc royalty, which has been paying us cash for the last couple of years. Shut down in November when prices dipped, but we expect that'll come back online. Any combination of these coming back will make us cash flow positive over the course of next year. So we got lots of other updates as well. I think our development portfolio is actually one of our biggest strengths. When I mentioned we have 72 assets, we're a company valued at around 25 million. We have royalties like Battery Hill, which is on the best manganese asset in North America. The PEA on that showcased about 7 million a year back to us once in production, and it has a 50-year mine life. So, when you look at that royalty alone, I think it makes us look undervalued. We've also got a feasibility study coming out on Associated later this year. That's partnered with Glencore. They've already had preliminary indications for project financing from a UK export-import bank. And that, again, these are both very long life assets, looking at 20 to 40 years. We have our Zonio Copper project as well. This is, I think, definitely for this market. We picked this up a couple years ago. They are about 18 months from a feasibility study. They only need a few more $1 million to do that. Copper oxide project in Arizona, very simple, 100 million capex. And so we're expecting some positive progress on that later this year as well. We've also got our Biscuit Creek royalty. We just increased that at the end of last year. We were expecting that once in production, that royalty is going to pay us around $5 million a year. They had about 70 years of resources. And Northern Graphite is one of the few graphite producers outside of China. They want to make this their flagship asset, and they're talking about bringing it into production in 2027. We've also got our Mono Graphite royalty. This is another royalty that could come back into production this year. It actually produced for about 20 months continuously prior to COVID and shut down because of COVID restrictions in the country. The management team right now is looking for about $20 million to put that back into production. And that would add about another $1 million a year in revenue for us as well. Outside of that, I'll just mention our Rana Nickel project. We're really excited about this. It's one of BHP's first investments under their new program, basically looking for large nickel and copper deposits. And so they've got a fully funded JV partner, lots of cash, and they are actively drilling that project out as well. It's hard to not focus on any one single royalty because we do have 40 royalties in the portfolio, but we're incredibly diversified. We've only raised 10 million equity to date, and we've built this portfolio. If we were to absolutely do nothing from here, we see this portfolio getting to 20, 25 million in cash flow a year within the next kind of 5-6 years, and that's at no cost to Electric Royalties. And we're definitely positioned in a space which has exponential growth forecasts for the next few decades. So I think this is the right business model for the space, and I think we've done a pretty good job putting this portfolio together. Definitely undervalued where we're at today. So if anyone has any questions later on, please come find me. I'm not feeling super well, so I probably won't be here this afternoon. So try and make your way over this morning. Awesome. Thank you.